the last 11 months has seen a great recovery by pound against the dollar, going from around 114 in March last year to currently trade up near 140, which is almost at 3-year highs. So given the rally, is there more strength to come, or actually is now the time to think about selling it short? I think pound against the dollar is always an interesting market. Clearly, for the last few years, we've had Brexit and the concerns about that and the delays. Then, like the rest of the world last year, clearly affected by the coronavirus pandemic. But we've seen some great trends. There's been a great trend in place, even if we missed out on buying at the lows back in March of last year. There's been this great trend going from September, from around 127 to where we are now. The market's moved almost 1,300 points. It is getting interesting up here because we've got these old levels coming in from April 2018, just ahead of the sort of 145 mark. So I'm wondering, well, the trend is still up. Should we still be buyers? Or actually, now is the time to think about getting ready to go short and the pound's going to sell off. Let's take a look at the trades. As usual, something of a mix of trades. The biggest winner for now is still oil, as the price of oil has pushed above $60 a barrel. But we do have a small pound against the dollar trade, which I put on in the last live stream we did on the 12th of February. We do these every week now from 2:30 UK time. And I always try and do a little trade during those. So we did buy in at 138.18. The market's moved about 110 points in our favour. So we're up about £139 on that. But let's take a look at it again, because I think there are still opportunities for the pound. Despite the continued strength, there's a lot of positive sentiment towards this market. Is it about to change? Let me talk about what to watch out for. Then we'll come back and look to get a trade on. Hello, I'm David Jones from Capital.com, and I thought we'd do an update, short-term, medium-term and long-term actually, for the pound against the dollar, because at the time of recording, we're seeing this market pushing up to its best levels in almost 3 years. So as usual in this video, I'll talk about what's driving it, what to look out for, the levels to watch. Then we will go back onto the platform, look at things in more detail from a technical point of view, and look to get another trade on for pound against the dollar. As usual, if you're watching this and you haven't subscribed, if you could subscribe for a couple of reasons, it does help support the channel. And also, we are doing these regular live streams now every Friday at 2:30 UK time. If you're subscribed, you'll get a notification off YouTube just before we're about to go live. Right, let's get into it. Let's take a look at the pound against the dollar in a bit more detail. So as I said, at the moment, we're getting pretty near 3-year highs. It's trading at its best levels. We've got to go back to April 2018 to see the pound this high. And of course, if we rewind back to last year, in March of last year, we saw pound against the dollar trade down to 114. It was its worst levels since the mid-1980s. So a massive collapse in the pound last year. But since then, we have seen this market bounce back by 20%, more than 20%. So the question is, as usual, how much further can it go? We've recently had the economic stats for last year for the UK economy. The UK economy shrank by just under 10% last year. That's its worst performance since the 1700s. So we've got to go back 300 years. Not surprising. Clearly we've seen economies around the world take a hit because of the coronavirus. The UK economy was particularly hard hit. Brexit came into focus again, of course, as we got to the end of 2020. It's finally done, I think, to the relief of everybody, whether they voted Remain or to leave. And actually, many people would take the view, well, because the UK did Brexit, one upside has been that we ended up getting the coronavirus vaccine quicker than plenty or most of the EU nations. So the UK government is claiming that as a major win. Partly because of this vaccine situation, the Bank of England, the UK central bank, expects the UK economy to bounce back quite strongly this year. We'll see how that pans out. But I think it is interesting that we didn't see the pound that hard hit, actually not hard hit at all, on that latest economic news for the UK's performance last year. It was hardly a surprise, but for now at least, there does appear to be a lot of positive sentiment towards sterling. The question as ever, considering the market has rallied by 20% off that major low last year, how much further is there left to go? Should we be buyers, or actually is it time to think about selling short? Let's look at the levels to watch, then we'll jump back onto the platform and set a trade up. So I think the most immediate level hurdle for the pound on the upside, it's not a million miles away, but 140, psychological, round number, that sort of level is the first one to watch. After that, it's those April 2018 highs. So it is those 3-year highs coming in at 143.80. I think that's the next big obstacle on the downside, because we have had quite a good uptrend. There are lots of obvious short-term support levels. The first of these is the 12th of February low, 137.75, a couple of 100 points or so below where we are now. Anyway, to put some color on these numbers, let's jump back onto the platform and set the trade up. So let's get into things. First of all, let's start looking off at Bollinger Bands for a change. We've seen really tight range on the Bollingers in recent months. Don't forget, these are an indication of volatility in the market. We go back to March last year. Obviously, the Bollinger Bands went wide apart as volatility really picked up. We had a bit of volatility in September of last year, but since then, since about October, we've seen a fairly tight range for the bands. At the moment, at the time of recording, the pound is pushing up near the top of the bands. So there's definitely scope for the Bollingers, for the market to slip back down towards, even the lower end is 136. But I think for now, any weakness still looks like a buying opportunity. If we have a look at the RSI down here, overbought on the RSI, not surprising given the strength. It's been overbought since early February, but the market is still going up. So again, even if the pound were to weaken from here, we drag the RSI out of this overbought situation, perhaps it ends up presenting an opportunity. But for me, perhaps not surprisingly, it's all about the price action. What's going on with the price up at these levels? I've picked up on a trend from the May low after the market bounced sharply off that March low. We established more of a sort of consistent trend, should we say, lots of touches on that trend line. That trend line's coming in at the moment around 134, so about 500 points lower than where we are now. So again, for me, even if we get a deeper sell-off from here, it still looks like a buying opportunity. I'd only really think the trend had changed if we took out that 134 level near enough. We've got the lows from the end of last year coming in ahead of that, about 134.30. So 134 is big support for this major trend, but perhaps for the short term, we need to look at a shorter term chart to try and set a trade up here. But let's just take a step back and come up with some targets. I think the obvious next hurdle, as I was saying there, 140, psychological level. I think if we break through that, that's when we start targeting these old highs just ahead of 144. So in the short to medium term, that's my next target for pound against the dollar. A run back above 140 and perhaps a move to the mid 140s. And let's not underestimate what a problem this could be. They were the highs in January 2018, the highs again in April, May 2018. So it really could be an issue if we see the market push much through 140. But for now, the momentum is still positive. And I think the short-term bias, short to medium-term bias is still for further gains. The only question is, where does the stop go? So what I want to do is perhaps focus on the accelerated trend over the last couple of months or so. So our trend since mid-December looks something like this. We've got support coming in around 137, just ahead of 137. You could even pick up, I suppose, on a sharper trend just during February. But what I want to do, I want to be a buyer. The only question is, do I buy now, where it's trading now at 139.30, or do I wait for a bit of weakness? Let's just zoom things in. The trade we did in the live stream was back down here, February the 12th, in the afternoon, around this sort of area, when we'd seen it sell off from the highs, stabilized, then moved higher and pushed out to fresh highs again. I think what I'd like to do here, I've got lots of support. First of all, the most recent support, 17th of Feb, coming in at 138.29. Stronger support back here, February the 12th, coming in at 137.75. I'd like to put an order in to buy. And what I'd like to do, we've seen it surge just actually at the time of recording. We've seen the market jump about 100 points higher in the last 4 hours. I'm going to put an order in to buy if we get some sort of pullback, which wouldn't be surprising. So I'm going to be a buyer at 138.60, that sort of area. So I'll put my order in to buy on any weakness. And when it comes to a stop loss, for me, like I say, we've got a level down here, 137.75. We've got support again at 137.40, 137.60 down here, and then various pockets all the way back. So I'm going to go for my stop loss. I'm going to be a buyer at 138.60. I'm going to put a stop in at 136.60. So a couple of 100 points away. It's a fairly wide stop, but it's been a volatile month. And I want to try and catch what I think could be the next major swing higher through 140. So I want to give the market a little bit of room. Let's set that trade up. So my order's ready to go. The market is currently 139.33. I would like to buy 18,000 if the price drops to 138.60. And you can see that on the chart there. So basically, if it just pulls back to where it was earlier today, before we had that surge. So perhaps we get it drifting over the next couple of days. If that order gets filled, put a stop down at 136.60. And you can see that's beyond some of these major lows. And also beyond that shorter term trend line that's been in place since December. And that's for a risk of £258, our normal risk of about £250. Let's place the limit order and have it sit there in the market. And if the market sells off from here, hopefully that order will get filled if we drift back to there. Let's take a look at the existing position. So we bought in at 138.18. The market's moved 115 points. I have moved the stop on that to break even. For now, I'm happy with that. I'll leave it there. I might change it in the live stream on Friday of this week. And there's the order I placed just now, buying 18,000 at 138.60. The market is about 70 points above that. I don't think it's too optimistic to think we might get that order filled. It has moved to something of an extreme away from this trend that's been in place the last couple of months. If we get a pullback, it'd be good to get that order filled and see if this market can actually burst its way through the 140 mark. That's it for our update for pound against the dollar. That trend is still strong. We'll see if it continues. But for now, from me, David Jones, and Capital.com, we'll leave things there. Good luck with your trading. For more trading videos just like this, please subscribe to our channel.